marking marking the support and resistance should be um the very basic thing that you should know. Okay, it is very simple. It is very simple. So I will start with the illustration again, and then we'll go back to the chart. Remember, I said that if the market is in an uptrend, it moves like this. hmm It does this to continue to go until there is what a shift in structure and then the market reverses. But then as it continues to form this, it is in a clear uptrend. And then we have got to understand that this level here is called higher high, and this is what higher low. This is higher high. This is higher low, higher high, higher low, higher high, higher low. So you see, if you get it from here, and when you translate it to the market, it becomes easy. So if I am going to mark my levels in this uptrend market, my focus is going to be here. All right, the higher high. So this one, then this, and then this, and this. Okay, so in this case, if I meet the market moving like this is how I'll mark it. And then we have learned how we are going to take advantage of it. We said that what we will do is that we'll wait for price. So let's say you meet it like this. So you've marked all this. Remember, all this one is gone, like it's in the past. The current one is here. So what you do is that you wait for price to drop onto this level, then boom, you enter. This is an uptrend, so you go for a buy, and then you anticipate that price will continue to push up. So you are going to pick it from here. So if we are making emphasis to what I have on the line, then it means that over here we would have missed it because it didn't get to our entry. Here too, we would have missed it. Here we would have missed it. But this is the thing. I mentioned the other time that there are several ways to do analysis. This is just one of them, and this is the easiest. That's why I want to take my time to make sure that you understand this one. Okay. This is the basic of any analysis, any strategy out there. This is the very basic. So if you understand it, it won't be difficult when we are adding others to it. Okay. All right. So this is what we are going to do for an uptrending market. Let's try and see what we will do for a downtrending market. Okay. So for a downtrending market, see the market is already is coming from the top, right? It's coming from the top, right? Like this. And then same way, remember we said this is lower low, lower high, lower low, lower high, lower low, lower high. So I'm going to mark the lower lows, right? I'm going to mark the lower lows. I'm going to mark the lower lows, just like I have done here. Okay. This is it. You see, it's not difficult. So I was wondering why you were getting it wrong. This is very simple. But the only thing is that you see when we take it to the chart, to the real market, the market will not give us a perfect flow like this. No, there will be a lot of outliers as the market moves. It's normal. It's part of the game. You just should know where to enter exactly. Okay. So this is for a downtrend. All right. So I think I'll go ahead and then add what I was going to teach today. Then when I'm done with that, we will go back to the chat, the real chat. I mean this one with the candles, and then we know how we are going to enter and then all that. Okay. So risks and then reward. That's what I sent to the platform. That's the title for today's risks and reward. Yeah. So in trading, we call it risk to reward ratio. Okay, risk to reward ratio. Just like the spelling, you see that the risk has 4 letters, the reward has 6 letters. So always your risk must be smaller than your reward. Okay, ideally that's how it's supposed to be. When we talk about risk and then reward, whenever you take a trade, so understand this, the moment you enter the market, Kim, you've taken a risk. Okay, the moment you enter the market, you've taken a risk. It's either the market will go against you or it will go in your direction. So these are the only two possible outcomes. All right. If that is the case, you must define your risk. By defining your risk, we mean that, remember, we learned how to do pips calculation and all that. You can decide to risk, let's say, 10 pips, and then you target 20 pips or 30 pips or 40, even 50. Okay, like I said, your risk must always be smaller than your reward. Okay, so if the pip um value will confuse you, someone's microphone is on and is disturbing. Okay, if the pip calculation will confuse you, define it in terms of money. So let's say you want to risk $10. How much do you want to target? If you are risking $10, then you can target, let's say $20 or $30 or $50. It depends. Okay. It depends on the market you are trading. So anytime that you trade, understand you are taking a risk. And if you are taking a risk, you should have a target in mind. And the target is what? Your reward. So if you are willing to risk this amount, then you should also be able to define how much you want to make. Okay. So I'm going to do this thing. I'm bringing it right back. Let's say the market is in an uptrend. Okay. If you watch it carefully, you see that when it is going up like this, that one is longer than when it is coming down. Okay, I mean this move. You see, it is longer compared to this by size. We call this move impulsive move and we call this retracement. Impulsive move, retracement. Impulsive move, retracement. Impulsive move, retracement. You as a trader, your target is to catch the impulsive move, not the retracement. Your target is to what? Catch the impulsive move, not the retracement. The reason is that the impulsive move is smaller compared to the retracement is smaller compared to the impulsive move. So it means if I target the impulsive move, I'll make more money than if I should target the retracement. Okay. So if I have this in mind, then that is how I'm going to pick my entries. So let's say, remember, remember, if we label this as higher high, if we label this as higher high, okay, this is what? Higher low. Remember, we have done this. Don't be confused. We have this as higher high, higher low, higher high, higher low. It is important to know these things by heart because you are going to define your stop loss, your take profit, and then all that using this. Okay, so your risk is the stop loss and the reward is the take profit. Okay, so I think someone asked me if I can, let go over the stop loss and stuff. Yeah. So in trading, because we have said that the retracement is smaller than the impulsive move. Normally, when we enter upon the retracement and then we catch it at the end of what? The impulsive move. What this is what I'm trying to say. If markets form this higher high and then I mark this higher high, this is what I wait for as a trader. I am waiting for price to come back to this level. So we call the strategy break and retest strategy. We call it the break and then retest strategy. Remember, if you mark the high here, when price goes through it, it has broken it. When it comes back to it, it's retesting it. Because when it was going through it, it tested it for the first time. So there's the first test. Then it comes back to it. So it is a retest. That's basically it. Okay. So we are going to enter upon the retest. If you enter upon the retest, we have learned that our stop loss must be below the previous higher low. So see, we are going to enter on what? The current higher high, and then our stop loss, sorry, is the previous, because this one will come as a retracement. So we have this higher high. So we are going to enter upon the on the previous higher high, and our stop loss will be below the previous higher low. So I'm going to change the color to red. Yeah. So in trading we use red for negative. So red for the stop loss. So I am going to put my stop loss here. Then um let me drag this a bit because I want my target to be bigger than my risk. That's why I'm doing that. Okay. Then if that is the case, if I am to enter here and my stop loss is going to be here, where am I going to put my take profit? Ideally, your take profit should also be around the immediate or the current higher high. That's why I said this one is rather the previous. So if I am taking a retest here, I mean that these things have not happened already. Okay, this thing we have here have not already happened. So I mean my take profit should be here. Okay, my take profit should be here. Now I'm going to change this to green because we use green for take profit. So ideally, this is how it's supposed to be. I enter on the higher high. My stop loss is what? Below the higher low. My take profit is around the current higher high. Okay, it is around the current higher high. So now let us check if what we have done here makes sense. Because remember we said that at any point, your stop loss must be smaller than your take profit. We can calculate that. So I'm going to pick this from here. This is a buy trade, so I'll pick the long. My stop loss should be here, so I'll put it exactly there, and my take profit should be here. So it will do the risk to reward ratio for me. This is it. It's 2.12. Let's forget about the points, and then it is what? 2 is to 1. What it means is that if we are risking $1, we are targeting $2. Basically, it means if we are risking $10, then our target is what? $20. This makes sense because our target or our reward is bigger than what? Our risk. Same way, if you are risking $1,000, your target is what? $2,000. So this makes sense. So I can take this trade. So if I suppose that I checked this and then it was less than 1, it means my risk is rather bigger than what? My reward. And such trade is not good to take. So you are going to ignore it. I want to believe this is clear. Yes, so this is the theory. When we go to the chart, I'll show you how that is done. But this is the same thing. When we do it this way, it becomes easier. That's why I'm doing the drawings. But I want to believe this is clear. Okay, so this is how you are going to set your take profit and then your stop loss. If you want to know how to set it, as in how you set it on the Trader app, I sent a video on that. It is on the platform. I will upload it this evening to the YouTube channel and share the link with you, just in case you want to uh, watch it all again. You can do that. I want to believe that this is clear. Okay, so the same way, if we are to, okay, good. So now let's look at something. If we are to enter here upon this retest, then according to the rule, this is where our stop loss should be below what the previous higher low, and our take profit should be what the current higher high. So you see that, look at it, the risk to reward is 0.94, which means that in this case, our risk is bigger than what our reward, and this is not a good trade. So if you have done your analysis and then you realize that your risk is rather bigger than your reward, don't take that trade, leave it. Okay, it's a bad trade. We classify it as a bad trade, so you don't take it at all. Okay, in a worst scenario, it should be 1.0, as in your risk is the same as your reward. The worst scenario should be that. We don't even encourage that, but then some advanced traders take that chance. Okay, so this is it. This is how we do it. So we've done it for an uptrend. Let us do it for a downtrend. Please, after here, if I ask you to do the markings, be sure to do the right thing because we have understood exactly where to place the lines. Okay. So you see that I'm not putting the line in between candles. I'm not doing that. Okay. All right. Let's do that for a downtrending market. Okay. So this is a downtrend, and then this is my lower low, my lower high. So this is how I'm going to do the marking. Sorry, let me change this to black so we don't confuse ourselves. Okay, so I mark my lower lows and the same idea, break and retest. So in this case, for the benefit of the class, allow me to do this. I want my risk to be smaller than my reward. So this will be the current low. Okay, so we have something like this here. So I'm going to put this here. Okay, so you see where I place them, lower low, lower low, lower low, lower low. And I said that we are going to enter upon the retest. So there's a break here. When price goes back to it, that's where we enter. If we enter here, our target should be where? This one. So the same way, if we want to, now this is a sell market, so that's short position. So we are going to enter here. This is where we are going to put our take profit. And this is where the previous higher low, this one. This is where we are going to put our stop loss. So you see now over here, our stop loss, the risk to reward ratio is 2.92, which is almost 3. So let's run it to 3. What it means is that if we are risking $10, our target is $30. And this is a very good trade. Okay. If we are risking $100, our target is $300. If we are risking $1,000, our target is what? $3,000. So this is a very good trade. So we can take this. All right. So this is how you set the stop loss. Okay, this is how you set the stop loss. Again, this is basic analysis. So this is one way you can do it. There are several other ways that you can do it, but this is the very basic, and this is simple to understand. It is the same idea you will apply to the others because we are dealing with support and resistance, demand and supply. And if we are putting our stop loss above this level, when we go to the other side, we will know exactly where to place it as well. So always be sure to check that your reward is bigger than your risk so that your trade can be classified as what? A good trade. All right. So I want to believe that we are on track over there too. So now let's go to the real market. Okay. Let us go to the real market and then see how we are going to do it. So this is the thing. Well, for the book that you read, it spoke about Rick's, what do you call it, top-down analysis. By top-down analysis, we mean that you analyze the market from the higher time frame, and then you take the entry from the lower time frame. Okay, so I want to use this market as an example. So this side was a clear uptrend. However, from here we have seen that price has started forming lower lows, lower lows. So market has changed from an uptrend toward a downtrend. So we are in a downtrend. If we are in a downtrend, I would like to take my trades on the 30 minutes. So all I have to do is to zoom to 30 minutes, okay? And you see we have a clear downtrend in markets here. Let me change this to my default colors. So you see, we first checked the trend on the higher time frame before we came to the lower time frame to take the trade. So that's what you are going to do. Always confirm the trend from the higher time frame, then you translate it to the lower time frame and then pick your trades from there. So this is what a clear downtrend. All of us know that this is a clear downtrend. If you don't know, go back to the videos and then revise. Okay. Now, what do we have to do? Let's mark the lower lows. So you identify the lower lows and then you mark them. So I'm going to mark this is my low right here. This one. You see lower low, lower high, lower low, this one. Now, this is the thing. We have some here, but I saw that this market broke all of them. It went above all of them and did the retest here. So I'm going to ignore all this and consider just this one. Okay. So that when you are doing the marking, you see that some of them are not really relevant because when price breaks it, it's not relevant again. So leave it. Okay. So I'll focus on this. Now there was a retest here. So I can mark this one. Then I mark this as well. You see the ease with which I am doing this. I have one here. This one too is a lower low. Then there is one here. So this is how you can easily identify it. So you see that when a market was, let's use this as an example, when it was dropping, we were having black, black, black candles. Okay, so if you are using the default colors, it will be red, red, red candles. Then you saw some green popping up or some white popping up. So just when the white candle forms around that area, there is a level there, either a support or resistance, depending on the trend of the market. Okay, remember the other time we said here we will set support level, but when price break them, they become resistant, and that's why we sell from the resistance. So that's how you will know that this is a clear level. So let me put it there. So you see, I am not putting them through candles. No, this is my target here, here, the lower low, here, the lower low, here, the lower low, here, the lower low, here. You understand? Because the things that you were sending me, I didn't like them at all. Over here too, you see, black candle, then boom, we have a white candle here. So this is my lower low. In fact, this one is also a lower low. I have ignored this because this and this are close together. So I'll just choose this over that. Okay. Then currently there is another one forming. You see just where the black candles ended. Just where the black candles ended before this white one went up. So I have another one here. So how did we say we are going to enter and then test our stop loss? So let's do something. So I'm going to use this point, this side as a reference point. So if I should take a sell, this is a downtrend. If I should take a sell from here, ideally my stop loss should be above this lower high. Okay, this was a high on the chart. It should be above it. I can use this as my target. Okay, I can use this as my target. The reason why I'm doing this is that the immediate lower low to use as a target is this. Now you see that the risk reward ratio is less than 1. It's too small for me. So I rather target this one. I rather target this one. So you see, this is also 2 points. So let's even target just this one. Let's use just this. So that's 2.26. It's fine. Okay, so I can take it. So it means if I'm risking $20, I'm targeting more than $40. That's just it. Okay. I'm targeting more than $40. Okay. And then if I should enter here, this one, yes, I'll have my stop loss above this. So this is, you see, there's a lower low here. This is the lower high. So above it, and then my take profit, according to this, should be here. Now this is 1.58, not up to 2, but it's more than 1. So it makes sense. You can still take this trade. We have another one here. So my good. So this is what I wanted to show you. So you see, this is a lower low. This is its lower high. So if I should enter here, ideally my stop loss should be above this. Now, this is the immediate low. You see this one is even worse because this is not even up to 20%. This is less than 0.2. So it means that this is not a good trade at all. However, I mean, we are using 30 minutes to do the reference. We can use the higher time frame to do that. If we are using the higher time frame, then we can even expand this. So in this case, this wouldn't be a good trade to take. So I'll come here. I'll take this one with my stop loss above this lower. this lower high. Then if you target here, this is also less than one, so it is still small. You can ignore it. Then there is this one here. So my take profit is here. If I put my stop loss, sorry, above this, this is 1.1. So this is cool, but for me, I will not take it. I trade 1:3 and above. Okay. So I will not take this one. Yes, but it's not always going to be short like this. Sometimes, there are a lot of candles in between, so you can get a very good risk to reward ratio. However, if you know the direction of the market, you can target even more. So if I enter here with my stop loss above this, I can target one. This can be my first take profit, which is 2.59. I can even go much lower, somewhere you up to this point, 4.5. Sometimes we can even do 10:1. It depends, okay, if you really understand what you are doing. So let me show you something. I'm going to the 4 hour time frame. I won't see it well. Let me. So from the daily time frame, I know that this market is going to sell all the way to the bottom here. I know it is going to sell all the way to the bottom here. So even on the lower time frame, I can be targeting somewhere down here. And if you do that, it's going to be crazy target. See, 1:18. So whatever you are risking, you multiply that by 18, that will be your result. But this, you have to wait for a long period because this can take more than a week, sometimes even a month before it will complete. That is why or we trade on the lower time frame and then we target just some few pips. So 1:2 is good, 1:3 is good, 2:4 is also fine, and then you are good to go. Okay, so this one is for a downtrending market. If we enter here, our target is to the next lower low. So that is how we set them. But what's important to me is where you are going to enter because some of you have started doing the demo trading, but you are just entering anyhow. You are entering it anyhow. So before you send me your trade history that you took a trade on Euro USD or something, send me the chart like this. Let me know exactly where you entered. Okay, because this is a retest. So if I see you entered here, then I know you understand the break and retest. Here is also a retest. I know you understand it. This one is also one. I know you understand it. This, we missed it. It didn't get there. So this is fine. If you had entered here, I know this is also a retest. So I know you understand what you are doing. So before you take any trade, do the analysis. Take a screenshot of the analysis. Then when you enter the trade, you can now take a shot of either your profit or your loss, then you share it with me. I want to believe this is fine. So let us do one for an uptrending market. So I'll just scroll to the right to identify when the market was going up so that we can look at that. Yeah, so we have one here. We have this one. Yeah. Yeah, so let's focus on this side. So I'm going to mark my higher highs. I'm going to mark my higher highs. I'm going to mark my higher highs. I'm going to mark them. Going to mark my higher highs. Yeah. So this is the last one. So just like we have learned, there was a perfect entry here. There is a break, a retest, so you can enter here. If you enter here, this is the previous higher low. So our stop loss will be here. Then our targets can be up here. Okay. So how do we do that? Long position, we enter here with our stop loss below this, and then I'll take profit somewhere here. That's what 5:1. So whatever you are risking, you are targeting times 5 of that. So if you are risking $10, it means you are targeting $50. If you are risking $100, it means you are targeting what? $500. So that is how it is done in an uptrend. Okay, so what about this side? There was a retest here. If you took this retest, then this is where you should put your stop loss. It should be below this higher low, right? It should be below this higher low. So you see that if you put your take profit here, now the risk to reward ratio is less than 1. It means that this one is what? Not a good trade. So from what we have learned, if it is less than 1, we are not going to take the trade. We will ignore it. We can increase our targets. If we put it here, we have 1.4. It's fine. You can take it. If we come here, this is almost 2. It is fine. Now, if the target was up here, if the target was up here, that is 3.5, and this is very good. You can take this trade. Okay. So this is how you are going to set the take profit and then the stop loss. Now you see I'm saying yeah, you can, increase the targets, you can do this, you can do that. You don't just do it. You make reference to the higher time frame. Okay. So you look at the higher time frame and then you see where price is likely to trade to. Then you can increase your target to that level. Okay. You can increase your target to that level. Yeah, so I'm going to allow you to ask your questions if you have some, then we can look at another.